Oh, I don't know if you guys heard any of that. I wasn't on the stage. This technology, you got to love it. My bad. Sorry about that. So just to be redundant, I'm assuming that you guys didn't hear anything I was saying because I wasn't on the stage. So tens just breached 460. We're about 6-7 basis points off the most recent best levels. MBS. I don't know if widen is the right word. I'd really have to put a chart on it, but my sense is MBS really starting to widen a bit. Fives are well in a 97 handle. That's really not a great level. 5.5s just breached a par, maybe 99.31. Sixes who've been really resilient. They are down below a 102 handle, and 6.5s are kind of rapidly approaching a 103 handle. And as I've discussed, those have been an outlier, but pools have been trading better than TBAs. We haven't gone out with any the last couple of days, so not sure if that's still the case. 8:15 data came and went, and this is one where you would think we might bounce a little bit on it. ADP 16.5 down from 19.75. You multiply 16.5 times 4 is what? 64 and 2, 66, I believe. A 66 run rate. Don't have it in front of me, but gut kind of tells me that would be about as weak a run rate as we've seen in a while. Overnight data, inflation data continues to moderate, although obviously current oil prices will have an awful lot to say about that in some of these future iterations. But yeah, I mean, I almost want to pull a Denny Green on you guys and say that this is what we thought it would be. This data is absolutely starting to weaken, should be accommodative for interest rates. But then, you have the four worst letters in interest rates right now, and that is IRAN. Tensions, if anything, rising. Threats have been made. And, at the end of the day, that seemingly is going to continue to put pressure on oil, and the higher the price of oil goes, the higher interest rates seemingly are going to go. Overnight stocks mixed, Nikkei rebounding, Europe pretty much up across the board, and here onshore same, NASDAQ indicating up about 1.5 points. Dow, S&P, and Russell more like 1/4 to 1/2. VIX down almost 5%. Would have you scratch your head a little bit on that relative to the price of a bunch of other things, including bonds. Brent solidly over a 90 handle, crude at 83. Boy, I mean, it's almost up $20 a barrel. In fact, might even be more than 20. But I forget. Did we scare a 50 handle? I don't remember, but we were low mid 60s for sure on crude. Silver up, copper up. I mean, really everything is up. Bitcoin up to 66. Dollar mixed. So yeah, another day of having to wait this stuff out. Tomorrow, not a ton of data. Thursday claims, Friday some secondary, call it BC data. Monday durables, usually not a market mover because pretty volatile. Tuesday we start to heat up, but really next week it's really all Wednesday and Thursday, Fed and GDP, and of course PCE. There's some light data on Friday. So how the heck do you guys manage this? Yesterday was a solid lock day for us, so I think good on you. We kind of weakened into the close a bit. We are approaching a real inflection point here. I think in bonds, it's hard to find value across the stack. I think that there's certainly still really good value on a relative basis in sixes. I mean, to put this into some context, sixes are trading about 2 points through 5.5s, right? 5.5s are only trading, and 5.5s are equally trading about 2 points through fives, right? But 6.5s are really only trading a little bit more than a point through sixes. So, there's some relative value in 5.5s. I think that there's still some real value in sixes, although we're probably 25 basis points in fee off some of the best levels. And 6.5s are getting just a bit sketchy on the TBA side. I think that interestingly enough, and sorry for you guys, probably creates some real value for secondary and cap markets desks, so-called hedgers. You have an opportunity to put on your rate sheet something that's marking to about 103, but probably trading that through screen. I think that, that would be sort of the hope for those guys. At this point, I think that you're living to kind of fight another day with the hope that you get some sort of relief out of the Middle East. And I got to tell you, I don't know that I see it coming necessarily. So, I think you got to hold your breath for another week or two. And I've said this, I feel like ad nauseum in the last 2 weeks. A lot of this is hurry up and wait. I've been saying for, probably 3 weeks that you should be locked up for July, certainly as it pertains to any interest rate kind of in a 6 handle. And if you were there, then what's happening today, tomorrow, the next day doesn't matter a heck of a lot. Quote some interest rates. You should probably be anywhere between 30-70 float lock to 70-30 float lock, depending on your closing timeline. And I think you're going to likely have some good stories to tell when it comes time to lock in that rate, because just current levels aren't supportive of where the economy seems to be or be heading. But oil and gas, I mean that and Iran, that's really it. So as always, thanks for joining live, watching on replay, and we will see you guys tomorrow. Remember, bulls and bears make money, pigs get slaughtered. Look, keep an eye on the stock open. Right now, there's going to be some pressure on bonds because there's, a little bit of a rotation into stocks. If we ease off that throughout the day, I'm not convinced that we don't end up a little bit green. And hopefully we get a headline out of the Middle East to be a little bit of a catalyst. There was some noise in Spain as well. Didn't necessarily love that. Let me see if I got, before I sign off, if there's any other news. Really, I looked real quick and didn't really see anything. Yeah, 10 straight nights of strikes. The Canadian tariffs, that certainly is not rate friendly. But yeah, that's really about it. The headlines, generally speaking, not rate friendly. The data is. Who's going to win? See you guys tomorrow. Have a great day.